What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPY for the S&P 500 ETF, of course. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, I want to point out the structure of today's candle. Of course, it is a hammer candle printing right off of that must-hold area that we discussed in the Sunday video over on the main channel, which was 437. So to me, it's not like it's not saying that we have to bounce here. It's not saying, oh, look, it's obviously a long setup looking for higher, but what it's saying is, okay, there's potential at least for a higher low to form around this area. Again, not a guarantee, but at least based on this candle structure that we printed today, there is some potential here. The buyers are stepping up at this nuanced area. You can see where that's coming from on the 30-minute time frame chart. Boom. Oops, let's try that again. There we go. Boom. One more time. There's your big breakout point, right, on the 30-minute time frame, and we're starting to support on the retest of that breakout. So to me, this is the do or die area inside of the S&P 500s. Don't forget, the flip side of this coin is, right, we did make a new lower low on today's session, and we certainly made a new lower high. We're also still firmly back down underneath that 443.50. So again, that's why I sort of mentioned that there's potential here for this to hold as a higher low, but there are still a number of bearish factors out there acting on price action to the downside. Let's take a quick look at the 30-minute time frame and how today's moves actually unfolded. Very choppy open, just sort of giving us that back and forth in here, ultimately flushing and then retracing and then flushing and then retracing. Very, very difficult stuff to trade here with multiple look belows and fails, multiple breakdowns, and then continuation patterns. I mean, it's very, very choppy and difficult to trade around these areas here. So for the, I don't want to say easier long, but the easier to identify long, okay, there's a big difference between those two things. The easier to identify long comes from up and over 443.50 and, you know, confirming that this here is truly going to be a higher low, right? We would also be recapturing the top end of this balance and the low end of the balance from right around in here. So 443.50, that's the upside where things get a little bit more clean to the upside there. To the downside, firmer breakdowns of the 437 area. So notice, not a whole lot of time was spent underneath. Sure, we get the lower wick that pierces, but there wasn't a whole ton of acceptance under there. If we accept underneath with time being spent below 437, the rotation is here to the bottom end of this prior range from the daily chart around 428.50, okay? So that's what I've got for you in the S&P 500. Keep in mind all of the factors at play here. We're kind of in no man's land with the hammer printing, so I would advise patience, probably being watchful for that 443.50 or 437 to the downside. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.